DONNIE, the language of business. We gonna hop right in. Chapter 1, Accounting, the language of business. www.uber.com. How do you get from the airport to your hotel when traveling on business? How do you get home from a party when it's not safe for you to drive? How do you get into the downtown business district for a meeting when parking is difficult and expensive? How do you get to any destination when taking your own vehicle is not convenient or possible? Taxis are not always available or affordable, and public transportation is difficult when in an unfamiliar city. Uber is a viable alternative to taxis and other forms of public transportation. Uber was created in 2009 as a private company in San Francisco, California, on a smartphone app used to summon personal transportation from Uber drivers to use their own vehicles to transport customers. Uber's initial business model as a personal transportation company has transformed to a multifaceted company that provides transportation, food delivery, and bicycle sharing, and a transfer network company that operates in over 785 metropolitan areas worldwide. They said 785 metropolitan areas. That's how many metropolitan areas worldwide. So that's like, how many people you think that is? That's a lot of people. Hundreds of millions, maybe even billions, because metropolitan worldwide, those are major cities. 785. Although Uber has had a turbulent history since its founding as a private company, it has raised a massive amount of investment capital to fund its operations. In January 2018, Uber raised $1.25 billion in cash from an investment group through a financing arrangement that valued the company to be $48 billion. On May 10, 2019, Uber became a public company through an initial public offering. Uber has incurred major losses as a result of the pandemic. However, the company has played a major role in offering free rides to sites and clinics offering we can't talk about that. They talking about that stab. As Uber continues to grow and seeks additional investment funding, accountants are pivotal in tracking and reporting the company's financial results and position in terms of revenues earned, expenses used, assets owned, and liabilities owed, as well as calculating the company's net income, revenue and expenses, and net worth, assets, liabilities. Let me go over that one more time. Now we're going to keep it pushing. Accountants are essential to the company's continued growth and success by providing financial information necessary for decision making. Think critically. Can you think of any organization that would be interested in how Uber is performing? Airport? I mean, yeah, I mean, where else? You know what I mean? Just anywhere. It could be anywhere. Any organization. It could be any organization. You know what I mean? Anybody. Uber, you know what I'm saying? Anybody could, you know what I'm saying, order an Uber. Learning objectives. Define accounting. Identify and discuss career opportunities in accounting. Identify the users of financial information. Compare and contrast the 3 types of business entities. Describe the process used to develop generally accepted accounting principles. Define the accounting terms new to this chapter. Okay, new terms. We got accounting. Damn, we got to go over everything, bro. Let's go over everything, man. I don't want to leave no stone unturned. I don't want to leave not one stone unturned. I just read through everything. And I got some homework practices to get through, some homework to submit. It might be a long one, man. At least I need to go for a stretch. You know what I'm saying? Getting through this, at least to a homework checkpoint or something, you know. Anyway. Accounting. The process by which financial information about a business is recorded, classified, summarized, interpreted, and communicated to owners, managers, and other interested parties. Okay. Accounting standards codification. Accounting standards codification. The source of authoritative U.S. GAAP. Accounting standards update. Changes to accounting standards codification are communicated through accounting standards update covering approximately 90 topics. Accounting system. A process designed to accumulate, classify, and summarize financial data. Auditing. The review of financial statements to the review of financial statements to assess their fairness and adherence to generally accepted accounting principles. Auditor's report. An independent accountant's review of a firm's financial statements. Certified bookkeeper, CB. We ain't talking about breezy. A designation that assures an individual possesses the level of knowledge and skill needed to carry out all key functions through the adjusted trial balance, including payroll. Certified public accountant, CPA. An independent accountant who provides accounting services to the public for a fee. I said for free. For a fee. CPA, certified public accountant, an independent accountant who provides accounting services to the public for a fee. Corporation. A publicly or privately owned business entity that is separate from its owners and has a legal right to own property and do business in its own name. Stockholders are not responsible for the debts or taxes of the business. Corporation. We going up with a corporation. Creditor. One to whom money is owed. One to creditor. One to whom money is owed. Creditor. discussion memorandum, discussion memorandum, an explanation of a topic under consideration by the Financing Accounting Standards Board. Economic entity, a business or organization whose major purpose is to produce a profit for its owners. Entity, anything having its own separate identity, such as an individual, a town, a university, or a business. Exposure draft, a proposed solution to a problem being considered by the Financial Accounting Standards Board. Financial statements, periodic reports of a firm's financial position or operating results. Fraud, intentional or reckless acts that result in confiscation of a firm's assets or the misrepresentation of the firm's accounting data. Generally accepted accounting principles, GAAP or GAAP. Accounting standards developed and applied by professional accountants. Governmental accounting, accounting work performed for a federal, state, or local government unit. Internal control, a company's policies and procedures to safeguard assets, ensure reliability of accounting data, and promote compliance with management policies and applicable laws. International accounting, the study of accounting principles used by different countries. Management advisory services, services designed to help clients improve their information systems of their business performance. Managerial accounting. That sounds so weird. Managerial accounting. Accounting work carried by an accountant employed by a single business and industry. Wait, what? Accounting work carried on by an accountant employed by a single business and industry. That makes sense now. The branch of accounting that provides financial information about business segments, activities, or products. That makes sense. Partnership, a business entity owned by two or more people who carry on a business for profit and who are legally responsible for the debts and taxes of the business. You should have went corporation. Public accountants, members of firms that public accountants, members of firms that perform accounting services for their public accountants, members of firms that perform accounting services for other companies. Separate entity assumption, the concept that a business is separate from its owners. The concept of keeping a firm's financial records separate from the owner's personal financial records. Social entity, a nonprofit organization such as a city, public school, or public hospital. Nonprofit organization such as a city, public school, or public hospital. That's a social entity. Okay. Sole proprietorship, A business entity owned by one person who is legally responsible for the debts and taxes of the business. Go corporation. Just go corporation. Statements of financial accounting standards. Accounting principles established by the Financial Accounting Standards Board. Stock. Certificates that represent ownership of a corporation. Just go corporation, you know what I'm saying? Get you some stock. Certificates that represent ownership of a corporation. Okay. That's stock. Stockholders. The owners of a corporation, also called shareholders. Okay. Tax accounting. A service that involves tax compliance and tax planning. Tax accounting. A service that involves tax compliance and tax planning. Okay, bet. That's all my new terms for chapter 1. Okay, let's go. Let's keep it popping. Yo, I gotta log into another session. Okay. I'm telling you, man. It be logging me. I just can't stay logged in. I gotta go through all this. X this out, sign back in. Open. It is just too much just to get to my. That's why I'm renting out the book. I rented it out. I'm gonna have the book on hand. They didn't have any more new ones, or I would have bought a new one. But I had to rent one out. So right now I'm on the ebook. But I think you know what? We gonna see about that. As long as I got the book on hand, I'm really gonna take off with it, because I'm about to read it like, bro, this is good for me because I'm reading. But not only that, I'm about to take off with it to where like I'm about to just consume so much information when it comes to accounting and where because I'm trying to really, if anything, you know what I mean, I'm not trying to work for no firm, or I ain't trying to work for anybody. I'm trying to put myself in a position to where like, okay, I just need to go get some clients, do taxes or financial, what I don't know what it is. I don't know. I ain't gonna lie. I don't know what it is. I don't know what it is. I'm just gonna go through it, you know what I'm saying, and become influenced by it to the point where, you know what I'm saying, it's gonna reveal itself. Okay. Okay. You got a little bit to read. So, what is accounting? That's a great question. What is accounting? Accounting provides financial information about a business or a non-profit organization. Owners, managers, investors, and other interested parties need financial information in order to make decisions. Because accounting is used to communicate financial information, it is often called the language of business. It is accounting is the excuse me. Hold on. I'm sorry. Accounting is called the language of business, or is often referred to as the language of business. Okay. That's why I went up with this live and I said the language of business. And that's what chapter 1 is called anyway. Accounting, the language of business. So I'm gonna run that back because that's important. That's the top of the chapter, really. What we just read was the introduction. Let me see. Yeah, talking about Uber. It's talking about Uber, you know what I mean? This is the beginning right here. What is accounting? Accounting provides financial information about a business or a non-profit organization. Owners, managers, investors, and other interested parties need financial information in order to make decisions. Because accounting is used to communicate financial information, it is often called the language of business. The language of business. Okay. The need for financial information. Suppose a relative leaves you a substantial sum of money, and you decide to carry out your lifelong dream of opening a small wow. Let me take my time. Okay, suppose a relative leaves you a substantial sum of money and you decide to carry out your lifelong dream of opening a small sportswear shop. You rent space in a local shopping center, purchase fixtures and equipment, purchase goods to sell, hire salespeople, and open the store to customers. Before long, you realize that to run your business successfully, you need financial information about the business. You probably need information that provides answers to the following questions. How much cash do the business have? How much money do the customers owe the business? How much money do customers owe the business? What is the cost of the merchandise sold? What is the change in sales volume? How much money is owed to suppliers? What is the profit or loss? As your business grows, you will need even more financial information to evaluate the firm's performance and make decisions about the future. An efficient accounting system allows owners and managers to quickly obtain a wide range of useful information. The need for timely information is one reason that businesses have an accounting system directed by a professional staff. Okay. Crack the dough, man. Accounting in everyday life. Accounting is not only used by business entities. With every choice we make, we are unconsciously using principles of accounting. We use accounting in everyday life through activities such as creating a personal budget for expending our earned income,
expanding,
creating a personal budget for expending our earned income. What do expending mean? Does that mean to spend or expand or expending to stretch? Expending. I heard of spending, but expending. EX. Hold on, let's look that up. I mean, come on. Hold on, bro. It might seem simple, but it's always the simple things that, come on, bro. If you don't know, you don't know, bro. Where did the book go? EXPENDING. Spend or use up. Expending means to spend or use up. We do not need to expend energy working on our marriage. Sounds about right. Okay. Tracking. Okay. So we use accounting in everyday life through activities such as creating a personal budget for expending our earned income, tracking the inflows and outflows of funds that we deposit in a checking or savings account, saving for the future, investing funds to earn additional income, and keeping track of our investments. That's part of that's even if the average individual thinks like that. You know what I'm saying? Most people don't even think like that. Creating a personal budget for expending our earned income. We might do that naturally, just make it stretch, but, some people don't think, you know what I mean? Tracking the inflows and outflows of funds as we deposit in a checking or saving account. People ain't doing that for real. Saving for the future. People don't save for the future. And that's why I'm like, I'm gonna take a deeper dive on this accounting, because I like how they talking, like investing funds to earn additional income, keeping track of your investments. This is life. You do this in life, man. You really setting up the generational run for your bloodline to, just based off your initial investments, your bloodline, gonna be able to continue to eat. You know what I'm saying? Accounting defined. Accounting is the process by which financial information about a business is recorded, classified, summarized, interpreted, and communicated to owners, managers, and other interested parties. An accounting system is designed to accumulate data about a firm's financial affairs, classify the data in a meaningful way, and summarize it in periodic reports called financial statements. Owners and managers obtain a lot of information from financial statements. The accountant establishes the records and procedures that make up the accounting system, supervises the operations of the system, and interprets the resulting financial information. Most owners and managers rely heavily on the accountant's judgment and knowledge when making financial decisions. Okay. Accounting careers. Many jobs are available in the accounting profession, and they require varying amounts of education and experience. Bookkeepers and accountants are responsible for keeping records and providing financial information about the business. Generally, bookkeepers are responsible for recording business transactions. In large firms, bookkeepers may also supervise the work of the accounting clerks. Many bookkeepers are certified bookkeepers, CB, a designation that assures an individual possesses the level of knowledge and skills needed to carry out all key accounting functions through the adjusted trial balance, including payroll. To become a CB, you must meet 3 requirements. You must, 1, pass the National Certified Bookkeepers exam. 2, sign a code of ethics. And 3, submit evidence of at least 2 years of full-time bookkeeping experience or 3,000 hours of part-time or freelance experience. Accounting clerks are responsible for the record-keeping part of the accounting system, perhaps payroll, accounts receivable, or accounts payable. Accountants usually supervise bookkeepers and prepare the final prepare the financial statements and reports of the business. Newspapers and websites often have job listings for accounting clerks, bookkeepers, and accountants. Accounting clerk positions usually require 1 to 2 accounting courses and little or no experience. Bookkeeper positions usually require 1 to 2 years of accounting education plus experience as an accounting clerk. Accountant positions usually require a bachelor's degree but are sometimes filled by experienced bookkeepers or individuals with a 2-year college degree. Most entry-level accountant positions do not have an experience requirement, but the education and experience requirements for accountant positions vary according to the size of the firm. You know what? We ain't gonna worry about all that though. We ain't gonna worry about all that because you have the information. It's really educating yourself, and we going through school anyway, so I ain't gonna worry about that part because they talking about bachelor's degree. And like they said, they said accounting positions usually require a bachelor's degree, but are sometimes filled by experienced bookkeepers or individuals with a 2-year college degree. You know what? At the end of the day, you know what I'm saying? We gonna make a way, As long as you got the information, we gonna have experience on the way. It's gonna be, got the information, now you gotta just get the experience of actually doing the work. And really, from there, like I said, I ain't really worried about I'm not even worried about trying to, get a job anywhere, If anything, I'm trying to apply it and, be all in and, have my own hustle, Whatever it is when it comes to the accounting, whatever I gotta do, I ain't trying to punch nobody clock. Trying to make it happen. I'm trying to make it happen, Now, I ain't saying I'm against it, but I'm saying where I'm trying to take it, I'm not doing this so I could, go to work and punch in at a firm or, spend time in somebody else's establishment. None of that. We doing this so we could apply it to our own life and, however we take off with it. They don't list the different careers of CB, bookkeepers, what else they say? Accounting clerk. Okay, Okay. It says, accountants usually choose to practice in one of 3 areas: public accounting, managerial accounting, and governmental accounting. Okay. Bookkeeping, accounting, and auditing clerks. Job duties. Bookkeeping, accounting, and auditing clerks produce financial records for organizations. They record financial transactions, update statements, and check financial records for accuracy. Education, some college, no degree. Occupation, budget analyst. Budget analysts help public and private institutions organize their finances. They prepare budget reports and monitor institutional spending. Entry-level bachelor's degree. I ain't gonna lie, you might have to go for a bachelor's. Shit. Don't be afraid of it if you gotta go for a bachelor's. Don't be afraid of it. Why is the system set up like that? I don't know, man. They be gatekeeping. You gotta get a bachelor's, bro. I can't be afraid of my mom. Shit. She'll tell you about her 2 M's. She'll tell you about her 2 M's. You know what I'm saying? And some more. And some more. You know, and some more. That's all I'm going to say. And some more. And I can't be afraid of it. They talking about bachelors. Okay. Okay, cost estimators. What is a cost estimator? Cost estimators collect and analyze data to estimate the time, money, resources, and labor required for product manufacturing, construction projects, or services. Some specialize in a particular industry or product type. Okay, I can understand that. You know what I'm saying? Like, you know, say a construction group, you know, they got to do some renovations, and, you know, you a business and you might need a cost estimator. You know what I mean? You might need a cost estimator. Financial analysts. Financial analysts provide guidance. Financial analysts provide guidance to businesses and individuals making investment decisions. They assess the performance of stocks, bonds, and other types of investments. Okay, that requires a bachelor's. You know what I'm saying? Financial managers. Financial managers are responsible for the financial health of an organization. They produce financial reports, direct investment activities, and develop strategies and plans for the long-term financial goals of their organization. Okay, bachelor's. Management analysis. A management analyst. Management analysts, often called management consultants, provide Management analysts, often called management consultants, purpose ways to improve an organization's efficiency. They advise managers on how to make organizations more profitable through reduced costs and increased revenues. Okay. Personal financial advisors. Personal financial advisors give financial advice to people. They help with investments, taxes, and insurance decisions. Okay, that's some, you know what I mean? We can do that. Post-secondary teachers. Post-secondary teachers instruct students in a wide variety of academic and vocational subjects beyond high school level. They also conduct research and publish scholarly papers and books. A doctoral or professional degree. Tax examiners and collectors and revenue agents. Oh, that's IRS. Tax examiners and collectors and revenue agents ensure that governments get their tax money from businesses and citizens. They review tax returns, conduct audits, identify taxes owed, and collect overdue tax payments. Top executives. Top executives devise strategies and policies to ensure that an organization meets its goals. They plan, direct, and coordinate operational activities of companies and public or private sector organizations. Top executive. Okay. We got a little bit more to go. Okay, that's time to take a break. I'm gonna take a break. But I really don't like to lead a stream. I don't really like to lead a stream. You know what I'm saying? People be going live, man. They be live for hours on top of hours. They be live for hours on top of hours. They be going for, man, ain't nothing for them to go a 10-hour live, 12-hour live, 24-hour marathon, 72-hour stream. They be going, look, Okay. Okay. I want to take a break. I want to take a break real quick. But we got to keep going, though, man. We got to keep going, bro. We only scratching it, bro. This still's chapter 1, bro. I'm trying to take a deep dive when it comes to this reading. And, bro, chapter 1, 2, and 3, even if you don't do the homework, bro, I want you to at least read chapter 1, 2, and 3, bro. I ain't gonna lie. Now, it's like at the end of each chapter, let me see. Okay. They got the review with the problems and the questions or whatever. You know what I'm saying? I might not do that until I get the book. Cause I need a pencil and paper, and I need that side by side, and I do that. You know what I mean? So I ain't gonna do it right now. I ain't about to deal with that. But all the information needs to be read. Everything needs to be read. You know what I mean? Bro, whoa, hold on, bro. I'm looking at chapter 1. Oh my goodness. Yo, I'm gonna have to read all this? This is only chapter 1. Hey, yo. Wait a minute, bro. It only got 2 sections, but section 2, crazy. And then it's chapter 2. Then chapter 3. Bro, we got to go through this, bro. Oh, my goodness, bro. Bro, I might have to take a break, bro. I got to take a leak, bro. My alarm going off, bro. It's 7:35. Yo, I might have to take a breather, bro. And then on top of that, bro, look, I'm not going to cut the live. Bro. Fuck that. I'll be right back, though. I had to take a leak, man. Yo, that's a lot of reading, though. That's a lot of reading. Man, the only way is, let's get it, bro. Okay. Okay, let's get it. Should I take off my shoes? Kick my feet up. Let me take off my shoes, kick my feet up real quick, man. I'm gonna say no Diddy because the camera right in front of me. But, come on, bro. We ain't gotta take it that far, bro. We relax, we chill. Come on now. What is you saying, bro? Come on. You need to be reading. Chop it up. Let's see. Okay. Certified bookkeeper exam. What about it? The certified bookkeeper exam consists of 4 parts. Part 1 deals with adjustment and error corrections. Part 2 covers payroll and depreciation. Part 3 covers inventory. And the Part 4 covers internal control and fraud prevention. To pass the exam, you must score To pass the exam, you must score 75% or higher on parts 1 and 2, which are closed book exams administered by computer. And you must score 70% or higher on parts 3 and 4, which are open workbook exams. In addition to passing the exam, you must also sign a code of ethics and meet either a full-time or part-time experience requirement. Okay. Public accounting. Public accountants work for public accounting firms. Public accounting firms provide accounting services for other companies. Usually they offer 3 services: auditing, tax accounting, management, advisory services. The largest public accounting firms in the United States are called the Big Four. The Big Four are the DONNIE and Touch and Ernest. What? Hold on. Because I don't know what this say.
Deloitte and Touche, Ernst T.
Deloitte and Touche, Ernst T. Anyway, bro, I'm not about to pronounce PricewaterhouseCoopers. Hold on, bro. This can't be real. PricewaterhouseCoopers. Bro, we haven't even scratched. Bro, come on, bro. All right. Many public accountants are certified public accountants, CPAs. To become a CPA, an individual must have a certain number of college credits in accounting courses, demonstrate a good personal character, pass the uniform CPA examination, and fulfill the experience requirements of state of practice. CPAs must follow the professional code of ethics. The CPA exam is developed by the American Institute. The CPA exam is developed by the American Institute of Certified Public Accountants, the AICPA. Is developing content for the redesign of CPA exam, with the new exam redesign targeted for January 2024. Present plans are for the exam to be assessed in 3 sections that will comprise the core of the exam. Additionally, the exam will test candidates in one of 3 disciplines they choose under the new CPA evolution licensure model. A draft blueprint of the redesigned CPA exam is scheduled to be published in July 2022. For additional information on the structure of the current exam and plans for the redesigned exam, please visit. Okay, look, come on now. Let's get into some, auditing. Auditing is the review of financial statements to assess their fairness and adherence to generally accepted accounting principles. Okay. Accountants who are CPAs perform financial audits. Okay. Tax accounting involves tax compliance and tax planning. Tax compliance deals with the preparation of tax returns and the audit of those returns. Tax planning involves giving advice to clients on how to structure their financial affairs in order to reduce their tax liability. Management advisory services involves helping clients improve their information systems on their business performance. Okay. Managerial accounting, also referred to as private accounting. Why don't they just say that? Private accounting involves working for a single business in an industry. Private accountants perform a wide range of activities, including establishing accounting policies, managing the accounting system, preparing financial statements, interpreting financial information, providing financial advice to management, preparing tax forms, performing tax planning services, and preparing internal reports for management. Man, this is all, bro, everything. I ain't gonna lie, bro. A lot of this, 90%, really 99% of everything is new to me. Bro, can't run from it, bro. Can't run from it, bro, because this is what's in front of me. Now I gotta, you see what I'm going through. I gotta read this. I got a lot of reading to do. Live. We doing it live. I got a lot of reading to do. Okay, governmental accounting. Governmental accounting involves keeping financial records and preparing financial reports as part of the staff of federal, state, or local governmental units. Governmental units do not earn profits. However, governmental units receive and pay out huge amounts of money and need procedures for recording and managing this money. Some governmental agencies hire accountants to audit the financial statements and records of the businesses under their jurisdiction and to uncover possible violations of the law. The Securities and Exchange Commission, the Internal Revenue Service, the Federal Bureau of Investigation, and Homeland Security employ a large number of accountants. About accounting. Accounting services. The role of the CPA is expanding. In the past, accounting firms handled audits and taxes. Today, accountants provide a wide range of services, including financial planning, investment advice, accounting and tax software advice, and profitability consulting. Accountants provide clients with the information and advice on electronic business, healthcare, performance measurement, healthcare performance measurement, risk assessment, business performance measurement, and information system reliability. Let me go over that one more time. They say accountants provide clients with information and advice on electronic business, healthcare performance measurement, risk assessment, business performance measurement, and information system reliability. Users of financial information. Objective: identify the users of financial information. The results of the accounting process are communicated. The results of the accounting process are communicated to many individuals and organizations. Who are these individuals and organizations? And why do they want financial information about a particular firm? Owners and managers. Assume your sportswear shop is in full operation. One user of financial information about the business is you, the owner. You need information that will help you evaluate the results of your operation, as well as a plan to make decisions for the future. Questions such as the following are difficult to answer without financial information. Should you drop from the product line the long sleeve pullover that is not selling well, or should you reduce the price? How much should you charge for the denim jacket that you are adding to the product line? How much should you spend on advertising? How does this month's profit compares with last month's profit? Should you open a new store? A major responsibility of owners and managers of an entity is internal control and the prevention of fraud. Internal controls are the company's policies and procedures in place to safeguard assets, ensure reliability of accounting data, and promote compliance with management policies and applicable laws. The goal of internal control policies and procedures is the prevention of fraud, which is intentional or reckless acts that result in the confiscation, confiscation of a firm's assets, or the misrepresentation of the firm's accounting data. Common internal control and fraud prevention policies and procedures include written proof that transactions and payments are authorized and separating duties among employees. Throughout this text and end of chapter problems, internal control and fraud prevention techniques are discussed for different classes and assets, including cash, payroll, inventories, and property, plant, and equipment. Okay. And that was talking about owners and managers. Okay. Suppliers. A number of other people that are interested in the financial information about your business. For example, businesses that supply you with sportswear need to assess the ability of your firm to pay its bills. They also need to set a credit limit for your firm. Banks. What if you decide to ask your bank for a loan so that you can open a new store? The bank needs to be sure that your firm will repay the loan on time. The bank will ask for financial information prepared by your accountant. Based on this information, the bank will decide whether to make the loan and the terms of the loan. Tax authorities. The Internal Revenue Service, IRS, and other state and local tax authorities are interested in financial information about your firm. This information is used to determine the tax base. Income taxes are based on taxable income. Sales taxes are based on sales income. Property taxes are based on the assessed value of buildings, equipment, and inventory, the goods available for sale. The accounting process provides all of this information. Okay. Regulatory agencies and investors. If an industry is regulated by a governmental agency, businesses in that industry have to supply financial information to the regulating agency. For example, the Federal Communications Commission receives financial information from radio and television stations. The Securities and Exchange Commission, SEC, oversees the financial information provided by publicly owned corporations to their investors and potential investors. A publicly owned corporations trade their stocks on stock exchanges and in over-the-counter markets. Congress passed the Securities Act of 1933, Securities Act of 1933, and the Security Exchange Act of 1934 in order to protect those who invest in publicly owned corporations. The SEC is responsible for reviewing the accounting methods used by publicly owned corporations. The SEC has delegated this review to the accounting profession, but still has the final say-so on any financial accounting issue faced by publicly owned corporation. If the SEC does not agree with the reporting that results from the accounting method, the SEC can suspend trading of the company's shares on the stock exchanges. Wait a minute, bro. I see like 3, 4, bro, 5 paragraphs, bro. 6 paragraphs, bro. Is this even important, bro? I'm about to skip this, bro. This don't even look important, bro. What we talking about, bro? Regulatory agencies and investors. Bruh. We almost done, though. We got like 10 paragraphs to read. And then I ain't gonna go on to the next page till I'm done. Let's read it, bro. Okay. Major changes were made to the regulatory environment in the accounting profession with the passage of the Public Company Accounting Reform and Investor Protection Act of 2002, also known as the
Sarbanes-Oxley Act.
Sarbanes-Oxley Act, that was signed into law by President George W. Bush on August 2nd, 2002. The act was the most far-reaching regulatory crackdown on corporate fraud and corruption since the creation of the Securities and Exchange Commission in 1934. The Sarbanes-Oxley Act was passed in response to wave of corporate and accounting scandals, starting with the demise of Enron Corporation in 2001, the arrest of top executives at the WorldCom and Adelphia Communications Corporation, and ultimately the demise of Arthur Andersen, an international public accounting firm formerly a member of the Big Five. Arthur Andersen was found guilty of an obstruction of justice charge after admitting that the firm destroyed thousands of documents and electronic files that related to errant audit engagement. Bro, why they talking about that, bro? That's why I said, is this even important, bro? The act significantly tightens regulation of financial reporting by public held companies and their accountants and auditors. The Sarbanes, look, bro, I'm going to just say SOA. Bro, the SOA created a 5-member public company accounting oversight board. The board has investigative and enforcement powers to oversee the accounting profession and to discipline corrupt accountants and auditors. The Securities and Exchange Commission oversees the board. 2 members of the board are certified public accountants to regulate the accountants who audit public companies, and the remaining 3 must not be and cannot have been CPAs. The chair of the board may be held by one of the CPA members, provided that the individual has not been engaged as a practicing CPA for 5 years. Major provisions of the Act include rules on consulting services, auditor rotation, criminal penalties, corporate governance, and securities regulation. The Act prohibits accountants from offering a broad range of consulting services to publicly traded companies that they audit, and require accounting firms to change the lead audit or coordinating partner and the reviewing partner for the company every 5 years. Additionally, it is a felony to knowingly destroy or create documents to impede, obstruct, or influence any existing or contemplated federal investigation. Brrr. Auditors are also required to maintain all audits to review work papers for 7 years. Criminal penalties up to 20 years in prison are imposed for obstruction of justice, and the Act raises the maximum sentence for defrauding pension funds to 10 years. They not playing. Chief executives and chief financial officers of publicly traded corporations are now required to clarify their financial statements, and these executives will face up to 20 years in prison if they knowingly or willingly allow material misleading information into their financial statements. Companies must also disclose as quickly as possible material changes in their financial position. Wall Street investment firms are prohibited from retailing against analysts who criticize investment banking clients of their firm. The Act contains provision with the board new protection for whistleblowers and lengthens the time that the investors have to file lawsuits against the corporations for securities fraud. By narrowing the type of consulting services that accountants can provide to companies that they audit, requiring auditor rotation, and imposing stiff criminal penalties for violation of the Act, it appears that this legislation will significantly help to restore public confidence in financial statements and markets and change the regulatory environment in which accountants operate. Customers pay special attention to financial information about the firms with which they do business. For example, before a business spends a lot of money on a new computer, the business wants to know that the computer manufacturer will be around for the next several years in order to service the computer, replace parts, and provide additional components. The business analyzes the financial information about the computer manufacturer in order to determine its economic health and the likelihood that it will remain in business. Okay. Employees and unions. Often, employees are interested in the financial information of the business that employs them. Employees who are members of a profit sharing plan pay close attention. Wow, let me take it from the top. Employees and unions. Often, employees are interested in the financial information of the business that employs them. Employees who are members of a profit-sharing plan pay close attention to the financial results because they affect employee income. Employees who are members of a labor union use financial information about the firm to negotiate wages and benefits. Okay, say figure 1.1 illustrates different financial information users. As you learn about the accounting process, you will appreciate why financial information is so important to these individuals and organizations. You will learn how financial information meets users' needs. So you got financial reporting. Outside of the business, you got banks, unions, customers, tax authorities, investors and potential investors, regulatory agents, suppliers. That's everything outside the business. Inside the business, employees, managers, owners. And that's that employees, managers, and owners, that makes sense because they in a business making the business run. They on a payroll. You know what I'm saying? Outside of the business, you got the banks, you know what I mean? You got the unions, you got the tax people, you got the customers coming in, you got people that's potentially want to invest, and you got people that's already invested. You got all these regulatory agencies coming in, making sure everything, copacetic. You got suppliers, you know what I'm saying? They shipping, everything you need. So, okay. We done got through that, bro. That was section 1. Okay, section 1 review. We ain't gonna worry about the section 1 review right now. We trying to read all the information, man. We got 3 chapters to go through. Okay. Section 2. This ain't no joke, man. I got a whole nother page. Let me see how. Oh, section 2 not that bad. Section 2 not that bad. After section 2, we could really just hop in. Really, after section 2, we could hop in chapter 2. After chapter, yeah. After section 2, we could just hop into chapter 2. I'm not about to go through all this right now. I just want to read. Because I could go through all this in my own time. I'm gonna need my notebook, and I got the book on the way. So the book should be coming in the mail real soon. So that's how I gotta have the book on hand, and I gotta have a notebook so I can write this stuff out. You know what I mean? Should I do it live? To be honest, I'm reading. It's easier this way. If I just read it. Look at all these definitions. And then you gotta dive right into it too. That's how it be. Huh. You just gotta dive right into it, Give myself a breather though. And like when I said I'm for real about it, look, we gonna see where it take. I'm gonna see where I take it. I'm gonna see where it takes me, Accounting, like I said, 99% of this is new to me, And this is not my first time doing something like this, you know what I mean? When it's all just new. And right now, it's one of those things where like, okay, I'm gonna have to just stick with it until it really starts clicking. Ain't no telling how long it's gonna take. I don't think it's gonna take that long, but it might be a little delayed gratification type of thing where hopefully, you know what I'm saying? Hopefully, I don't know. I don't know where like I said, I don't know where I'm taking it. I don't know where I'm going with it, bro. But I know that, I'm going to the moon. That's what I'm going to say. I'm going to the moon with it. I'm going to take it to the moon. That's all I'm going to say. It can't be that hard. It can't. Come on, bro. I'm not thinking of where like, oh, I can't make it happen or this and that. Society, whatever. You know what I'm saying? Look, accounting. Why accounting? Why accounting? Bro, I just, honestly, bro, I think it was because of something that I said. Really, I don't think it had anything to do with, like, okay, me just choosing the class. I think, really, it was meant to be because, you know, I was talking about, like, you know, spiritual currency, you know what I'm saying? And I think it was, like, some type of wish that I made or confirmation that I made to the universe or something, like, and I think accounting presented itself to me like, this is what it is. And honestly, like I said, I don't know where I'm taking it, to be honest. I don't know where I'm taking it. I don't know, but I know that, you know what I'm saying, I'm not gonna stop. We going all the way with it. We going all the way with it. That's where I'm taking it, all the way. You know, all the way. But right now, this is completely new. It's completely new. It's a little bit boring. I ain't gonna lie. Low-key boring. I ain't gonna say boring to where like I'm learning a lot of new words that I like though. Phrases. I'm learning about money. You know what I mean? Investing. I just know that it's gonna help me because at least I know that I have to sit down and read. And I know that's something that I've probably been running from a long time. Sit down and read. But, you know what I mean? I do read comic books from time. I have my moments where, like, I just be reading comics. You know what I'm saying? I ain't gonna act like I read them every day. But, like, I have my phases where, like, I go buy a couple comic books and read them. You know what I mean? Or I have my moments I go to the library, pick out a book, you know what I mean? Read it a little bit. But I know this accounting work, this is something that I'm going to have to influence my mind with. I'm going to have to really influence my mind with it, really. It's the language of business, and I'm a language learner, so it only makes sense. Because we still got to, you know what I'm saying? I do have Espanol in the mix. Believe that. I have it in the mix. Anyway, we on section 2. Section 2. Fuck. Like I said, section 2, and then you can hop right into chapter 2. Section 2. Section objectives. Compare and contrast the 3 types of entities. Why it's important. Each type of business entity requires unique legal and accounting considerations. Describe the process used to develop generally accepted accounting principles. Why it's important. Accounting professionals are required to use common standards and principles in order to produce reliable financial information. Terms to learn. Accounting standards. Codification. The source of authoritative U.S. GAAP. Okay. Accounting standards update. Changes to accounting standards codification are communicated through accounting standards update covering approximately 90 topics. Didn't I already go over this? I did. Do I have to go over them again? I mean, I said don't leave not one stone unturned. Just go through them, bruh. Auditor's report. An independent accountant's review of a firm's financial statements. Corporation. A publicly or privately owned business entity that is separate from its owners and has a legal right to own property and do business in its name. Stockholders are not responsible for the debts or taxes of the business. Creditor, one to whom money is owed. Discussion memorandum, an explanation of a topic under consideration by the Financial Accounting Standards Board. Economic entity, a business or organization whose major purpose is to produce a profit or for its owners. Entity, anything having its own separate identity, such as an individual, a town, a university, or a business. Exposure draft, a proposed solution to a problem being considered by the Financial Accounting Standards Board. General Accepted Accounting Principles, GAAP. Accounting standards developed and applied by professional accountants. International accounting, the study of accounting principles used by different countries. Partnership, a business entity owned by two or more people who carry on a business for a profit and who are legally responsible for the debts and taxes of the business. Separate entity assumption, the concept that a business is separate from its owners. The concept of keeping a firm's financial records separate from the owner's personal financial records. Social entity, a non-profit organization such as a city, public school, or public hospital. Sole proprietorship, a business entity owned by one person who is legally responsible for the debts and taxes of the business. Statements of financial accounting standards. Accounting principles established by the Financial Accounting Standards Board. Stock, certificates that represent ownership of a corporation. Stockholders, the owners of a corporation, also called shareholders. Okay. Types of business entities. Objective, compare and contrast the three types of business entities. The three major legal forms of business entity are the sole proprietorship, the partnership, and the corporation. In general, the accounting process is the same for all three forms of business. Okay. In general, the accounting process is the same for all three forms of business. Later in this book, you will study the different ways certain transactions are handled depending on the type of business entity. However, you will learn about the different types of business entities. Sole proprietorships. A sole proprietorship is a business entity owned by one person. The life of the business ends when the owner is no longer willing or able to keep the business going. Many small businesses are operated as sole proprietorships. The owner of a sole proprietorship is legally responsible for the debts and taxes of the business. If the business is unable to pay its debts, the creditor, those people, companies, or government agencies to whom the business owes money, can turn to the owner for payment. The owner may have to pay the debts of the business from personal resources, including personal savings. When the time comes to pay income taxes, the owner's income and the income of the business are combined to compute the total tax responsibility of the owner. See, sole proprietorship not the way to go. It's not. It's important that the business transactions be kept separate from the owner's personal transaction. If the owner's personal transactions are mixed with those of the business, it will be difficult to measure the performance of the business. The separate entity assumption describes the concept of keeping the firm's financial records separate from the owner's personal financial records. Okay. Partnerships. A partnership is a business entity owned by two or more people. The partnership structure is common in businesses that offer professional services such as law firms, accounting firms, architectural firms, medical practices, and dental practices. At the beginning of the partnership, two or more individuals enter into a contract that details the right, obligations, and limitations for each partner, including the amount each partner will contribute to the business, each partner's percentage of ownership, each partner's share of profits, the duties each partner will perform, and the responsibility each partner has for the amounts owed by the business to creditors and tax authorities. The partners choose how to share the ownership and profits of the business. They may share equally or in any proportional agreed upon in the contract. When the partner leaves, the partnership is dissolved, and a new partnership may be formed with the remaining partners. Partners are individually and as a group responsible for the debts and taxes of the partnership. If the partnership is unable to pay its debts or taxes, the partner's personal property, including personal bank accounts, may be used to provide payment. It is important that partnership transactions be kept separate from the personal financial transaction of the partners. Look, corporation the best way to go. You know what I'm saying? They say corporation ain't responsible for no taxes. Or we gonna read about we gonna read about it. We gonna read about it. I ain't gonna say that. We gonna read about it. Under the Limited Liability Partnership Act of most states, the limited liability partnership (LLP) may be formed. An LLP is a general partnership that provides some limited liability for all partners. LLP partners are responsible and have liability for their own actions and the actions of those under their control or supervision. They are not liable for the actions or
Malfeasance
of another partner. Malfeasance. Let's look up. Except for the limited liability aspect, LLP generally have the same characteristics, advantages, and disadvantages of any other partnership. Okay. Corporations. Important. Separate entity assumption. For accounting purposes, all forms of businesses are considered separate entities from their owners. However, the corporation is the only form of business that is a separate legal entity. A corporation is a business entity that is separate from its owners. A corporation has the legal right to own property and do business in its own name. Corporations are very different from sole proprietorships and partnerships. Stock, issued in the form of stock certificates, present the ownership of the corporation. Corporations may be privately or publicly owned. Privately owned corporations are also called closely held corporations. The ownership of privately owned corporation is limited to specific individuals, usually family members. Stock of closely held corporations is not traded on an exchange. In contrast, stock is publicly owned corporation is bought and sold on stock exchange and in over-the-counter markets. Most large corporations have sold thousands of shares of stock. An owner's share of the corporation is determined by the number of shares of stock held by the owner. An owner's share of the corporation is determined by the number of shares of stock held by the owners compared to the total number of shares issued by the corporation. Assume that Hector Flores owns 600 shares of Sample Corporation. If Sample Corporation has, why do they say Sample? Hold on. Let's make this sound. Let's say, assume Victoria owns 600 shares of Victoria's Secret. If Victoria's Secret has issued 2,000 shares of stock, Victoria owns 30% of the corporation. 600 shares divided by 2,000 shares equals 0.30 or 30%. Some corporate decisions require a vote by the owners. For example, for Victoria's Secret, Victoria has 600 votes, one for each share of stock that she owns. The other owners have 1,400. Okay. Let's move on. Okay. Bro, we gotta read this, bro. Oh my goodness. Bro. Reading is an exercise, really. Reading is really an exercise. Because I'm like, yo, I gotta read this, man. I gotta read it. I gotta read this. Bruh. It's only about to be 8:30. I've been live for an hour 30 minutes. And not only I'm not even on chapter 2 yet. Okay, bro. Come on. Subchapter S corporations, also known as S corporations, are entities formed as corporations that meet the requirements of Subchapter S of the Internal Revenue Code to be treated essentially as a partnership, so the corporation pays no income tax. Instead, shareholders include their share of corporate profits and any items that require special tax treatment on their individual income tax returns. Otherwise, S corporations have all the characteristics of regular corporations. The advantage of S corporation is that the owners have limited liability and avoid double taxation. One of the disadvantages of the corporate form of business is the indefinite life of the corporation. A sole proprietorship ends when the owner dies or discontinues the business. A partnership ends on the death or withdrawal of a partner. In contrast, a corporation does not end when ownership changes. Some corporations have new owners daily because their shares are actively traded, sold on stock exchanges. Corporate owners, called stockholders or shareholders, are not personally responsible for debts or taxes of the corporation. If the corporation is unable to pay its bills, the most stockholders can lose is their investment in the corporation. In other words, the stockholders will not lose more than the cost of the shares of the stock. The accounting process for the corporate entity, like the sole proprietorship and partnership, is separate from the financial affairs of its owners. Usually, this separation is easy to maintain. Most stockholders do not participate in the day-to-day operations of the business. A limited liability company combines the best features of a partnership with those of a corporation, even though from a legal perspective it's neither. Okay, run that back. A limited liability company combines the best features of a partnership with those of a corporation, even though from a legal perspective it's neither. While offering its owners the limited liability of a corporation, an LLC with more than one owner generally is treated as a partnership for tax purposes. The limited liability extends to all the LLC owners, so the LLC is similar to a limited partnership with no general partners. Unlike S corporation, an LLC may have a limited number of owners who can be almost any type of entity. Under special IRS regulations, an LLC may elect to be taxed as a corporation or as a partnership. If the LLC elects to be treated as a partnership, it should be filed Form 1065 U.S. Return of Partnership Income. If the LLC elects to be treated as a corporation, it should be filed Form 1120 U.S. Corporation Income Tax Return. If the LLC elects to be treated as an S corporation, it should be filed Form 1120 U.S. Income Tax Return for S corporation. Okay. We almost there. We on our way to chapter 2. Yo, I might have to break it down like, okay, chapter 1. After this section, bro, we might have to do chapter 2 in another live, man. I ain't gonna lie. I'm not gonna lie, bro. I'm not gonna lie. Generally accepted accounting principles. The Securities and Exchange Commission has the final say on matters of financial reporting by publicly owned corporations. The SEC has delegated the job of determining proper accounting standards to the accounting profession. However, the SEC sometimes overrides decisions the accounting profession makes. To fulfill its responsibility, the accounting profession has developed and continues to develop generally accepted accounting principles, GAAP. Generally accepted accounting principles must be followed by publicly owned companies unless they can show that doing so will produce information that is misleading. The development of generally accepted accounting principles. Generally accepted accounting principles are developed by the Financial Accounting Standards Board, the FASB, which is composed of 5 full-time members. Prior to 2009, the FASB issued 168 statements of financial accounting standards. The FASB developed these statements and, before issuing them, obtain feedback from interested people and organizations. First, the FASB wrote a discussion memorandum to explain the topic being considered. Then, public hearings were held where interested parties could express their opinions, either orally or in writing. The groups that consistently expressed opinions about proposed FASB statements were the SEC, the American Institute of Certified Public Accountants, public accounting firms, and the American Accounting Association, and businesses with a direct interest in a particular statement. The AICPA is a National Association for Certified Public Accountants. The AAA is a group of accounting educators. AAA members research possible effects of a proposed FASB statement and offer their opinions to the FASB. After public hearings, the FASB released an exposure draft, which describes the purpose statement, the proposed statement. The FASB received and evaluated public comment about the exposure draft. Finally, the FASB members voted on the statement. If at least 4 members approved, the statement was issued. I know that sounded like a lot of whoop-la. GAAP, how the board of directors and all that. You know what I mean? Bro, this is what, chapter 1, section 2? The use of generally accepted accounting principles. Every year, publicly traded companies submit financial statements to the SEC. The financial statements are audited by independent certificate. Take it from the top, take your time. The use of generally accepted accounting principles. Every year, publicly traded companies submit financial statements to the SEC. The financial statements are audited by independent certified public accountants. The CPAs are called independent because they are not employees of companies being audited, and they do not have a financial interest in the company. The financial statements include the auditor's report. The auditor's report contains the auditor's opinion about the fair presentation of the operating results and financial position of the business. The auditor's report also confirms that the financial information is prepared in conformity with generally accepted accounting principles. The financial statements and the auditor's report are made available to the public, including existing and potential stockholders. Okay. It says managerial implications, financial information. Managers of a business make sure that the firm's accounting system produces financial information that is timely, accurate, and fair. Financial statements should be based on generally accepted accounting principles. Each year, a publicly traded company must submit financial statements, including an independent auditor's report to the SEC. Internal reports for management need not follow generally accepted accounting principles, but should provide useful information that will aid in monitoring and controlling operations. Financial information can help managers to control present operations, make decisions, and plan for the future. The sound use of financial information is essential to good management. Okay. Businesses and the environment in which they operate are constantly changing. The economy, technology, and laws change. Generally accepted accounting principles are changed and refined as accountants respond to the changing environment. A summary of generally accepted accounting assumptions and principles is reflected in Table 1-1.3. A full discussion of the principles and assumptions is presented later in the text. Okay. Okay, assumptions. Number 1, separate entity. Explanation. Assumes that the business is a separate entity from its owners. Transactions in the records of a business and the resulting financial statements reflect the affairs of the business, not the affairs of the owners. Assumptions. Number 2, Assumptions number 2, going concern. Explanation. Assumes that the business will operate indefinitely. The assumption permits the business to record property and equipment and assets at their cost without having to be concerned about what they are worth in case of liquidation in the future. Assumptions. 3, monetary unit. Explanation. Assumes that financial facts and events are meaningful only when they are expressed in monetary terms. This assumption also assumes that the value of the monetary unit is stable. Assumptions. Number 4, periodicity of income. Explanation. Assumes that the activities of the business can be separate into time periods, with revenues and expenses being assigned on a logical basis to those time periods. Okay. Then we got principles. Number 1, historical cost basis. Explanation. Under this principle, business transactions, with few exceptions, are recorded on a historical cost basis, which is the amount of consideration expressed in monetary terms involved in transaction dealings in the market between the business and outsiders. 2, principle. 2, revenue recognition. Principle number 2, revenue recognition. Revenue recognition. Explanation. Revenue is recognized when it is both earned and realized. The earning process is completed when the product or service has been delivered and the related cost has been incurred. Principle 3, matching. Explanation. To properly measure income, expired costs incurred in earning the revenue must be reported in the same period that the earned revenue is reported. Principle 4, full disclosure. Explanation. This principle requires that all information that might affect the user's interpretation of the profitability and financial position of the business must be disclosed or reflected in the financial statements or notes to the statements. Full disclosure. Okay, look, that was wow. Hold on. Yeah, that was chapter 1. Now I got a whole bunch of I got review questions, and then I got the okay. I might as well go over this too. Okay, let me go over this. I ain't gonna cheat myself. Review chapter summary. So this is the review of the chapter. So we gonna do this. I'm gonna read the review of chapter 1, language of business. I'm gonna read the review and I'm gonna cut it. I'm gonna just cut it. You know what I'm saying? So, review, chapter summary. Accounting is often called the language of business. The financial information about business is communicated to interested parties in financial statements. Learning objectives. 1-1. Define accounting. Accounting is the process by which financial information about a business is recorded, classified, summarized, interpreted, and communicated to owners, managers, and other interested parties. Accurate accounting information is essential for making business decisions. 1-2. Identify and discuss career opportunities in accounting. There are many job opportunities in accounting. Accounting clerk positions, such as accounts receivable clerk, accounts payable clerk, and payroll clerk, require the least education and experience. Let me run it back. Accounting clerk positions, such as accounts receivable clerk, accounts payable clerk, payable clerk, accounts receivable is like, I'm a business. I done bought supplies. I done bought some workout. I own a gym. I done bought some workout equipment. I done bought a power bar. You know what I mean? Let's just say I done bought a squat station with, you know what I mean, all the bells and whistles. You know what I mean? That cost like $1,000. The people that I bought it from, I use credit. So, you know what I mean, that's accounts payable, to where I'm going to eventually have to pay that off, but I use credit. You know what I'm saying? So that's accounts payable. Accounts receivable is, say, okay, I did a consultation. Well, a consultation you got to pay up front. But say if I did a service, you know what I mean, for a company, I redid a whole, the warehouse needed a new paint job, you know what I'm saying? Painted the whole warehouse, where, okay, they only paid, it cost about like 20 bands. They only paid 5. Well, accounts receivable would be like, okay, they owe us 15 more, but we got the 5. We still gonna get the work done, you know what I mean? But that's accounts receivable. They got 15 more to cough up. Okay. Anyway, bro, let me read this, man. Come on now. Front of top. 1-2. Identify and discuss career opportunities in accounting. There are many job opportunities in accounting. Accounting clerk positions, such as accounts receivable clerk, accounts payable clerk, and payroll clerk, require the least education and experience. Bookkeepers usually have experience in accounting clerks and a minimum of 1 to 2 years of accounting education. Certified bookkeepers are individuals who have passed a 4-part exam that aim to assure the level of knowledge and skills needed to carry out all key accounting functions through the adjusted trial balance, including payroll. Most entry-level accounting positions require a college degree or significant experience as a bookkeeper. Accountants usually specialize in one of 3 major areas: public, managerial, and governmental accounting. Some accountants work for public accounting firms and perform auditing, tax accounting, or management advisory functions. Other accountants work in private industry where they set up and supervise accounting systems, prepare financial reports, prepare internal reports, or assist in determining the prices to charge for the firm's products. Still, other accountants work for government agencies. They keep track of public funds and expenditures.
Expenditures.
Expenditures. They keep track. Brah. Still, other accountants work for government agencies. They keep track of public funds and expenditures. Or they audit the financial records of businesses and individuals to determine whether the records are in compliance with regulatory laws, tax laws, and other laws. The Securities and Exchange Commission, the IRS, and FBI and Homeland Security employ many accountants. Okay, 1-3. Identify the users of financial information. All types of businesses need and use financial information. Users of financial information include owners and managers, employees, suppliers, banks, tax authorities, regulatory agents, and investors. Nonprofit organizations need similar financial information. A major responsibility of owners and managers of an entity is internal control and prevention of fraud. Internal controls are the company's policies and procedures to safeguard assets, ensure reliability of accounting data, and promote compliance with the management policies and applicable laws. 1-4. Compare and contrast the three types of business entities. A sole proprietorship is a business entity owned by one person. The life of the business ends when the owner is no longer willing or able to keep the business going. A partnership is owned by two or more people. The owners are legally responsible for the debts and taxes of the business. Limited liability companies, LLC, are recognized by most states. LLCs can elect to be taxed as a partnership or corporation. A corporation is a separate legal entity from its owners. Note that all three types of business entities are considered separate entities for accounting purposes. 1-5. Describe the process used to develop generally accepted accounting principles. The SEC has delegated the authority to develop generally accepted accounting principles to the accounting profession. The Financial Accounting Standards Board handle this task. A series of steps used by the FASB includes issuing a discussion memorandum, an exposure draft, and a statement of principle. The SEC oversees the Public Company Accounting Oversight Board that was created by the Oaksley Act. The board regulates financial reporting by accountants and auditors of publicly held companies. Each year, firms that sell stocks on stock exchange, or in over-the-counter markets must publish audited financial reports that follow generally accepted accounting principles. They must submit their reports to the SEC. They must also make the reports available to stockholders. Okay. And that's that, bro. And then, yeah, bro, that's that. And then, okay, let's end it off on these questions right here too, because this is important. This is important. So, and this is a comprehensive self-review. What is the purpose of accounting? What does the accounting process involve? What is the purpose of the auditor's report? What are the three major types of business entities? How is ownership of a corporation different from that of a sole proprietorship? I'm telling you right now, man. I read about it all. We're gonna let it marinate. We know the difference between ownership and sole proprietorship. Sole proprietor, you still gonna be on the back burner. Corporation, you got stocks, stock certificates, shareholders, okay. And then the purpose of an auditor's report, financial statement, and make sure everything copacetic with the other accountants, right? And then the 3 major type of business entities, we already went over that, corporation, partnership, sole proprietor. Then what does the accounting process involve? Well, what is accounting? Accounting gather and communicate financial information about a business. And then let's see. What does the accounting process involve? Recording, classifying, summarizing, interpreting, and communicating financial information about a business. That's what accounting is. Okay. And then what? We got discussion questions. Okay, we on chapter 2. Am I about to start reading chapter 2 right now? No. We about to cut this live. We've been live for 2 hours straight reading. I think that's decent. I'm just going through chapter 2, see what I gotta, cause I've been through chapter 2, but I gotta go back over it. I gotta go back over chapter 2. I know that. And chapter 2 really not that bad, but I know I gotta go over it again. All of it from the top. And I know I got some when that book touched down in the mail, I know I got some homework to do, out the book. I ain't gonna worry about doing that out the MacBook right now. I'm just reading, you know what I'm saying? But chapter 2, chapter 3, we gonna have to chop that up. But man, we gonna call it a night on that. We gonna let that marinate. I'm glad I did it live, you know what I mean? I held myself accountable and was like, man, let me read. I thought I was gonna get through all I'm not about to get through all chapters tonight. Like, not right now. Nah. We might have to wake up early and get it too. Get it again. Get another. If it's gonna take, cause I'm gonna get better. You know what I mean? But if it's gonna take that long, you know what I mean? I'm gonna have to get a session in every day, cause this is important. You know what I mean? Where I'm taking it, where I'm going with it, I don't know. But right, this is where I'm at with it. You know what I'm saying? And I feel like, I gotta read. Just read. And I'm not worried about the views, none of that. I just want to make sure I'm reading live. I'm reading live. That's important to me. Because that's something I feel like, it ain't going nowhere. It ain't going to jump in your head. You know what I'm saying? And like I said, I'm new to it. And I'm just going with the motions of, you know how it be when you try something new. Can't just stop. Like, we gotta be all in with it. You know what I'm saying? We don't got that luxury of just, you know what I mean? Not anymore. Maybe before you could, like, just, play something off and just, it could be like you got it on the back burner, or, oh yeah, I got other options, this and that, or, like, you might have excuses not to really take a deep dive, but, like, this is what's in front of me right now, for real. And can't run away from it. This is what I have in front of me. That's the best way I could put it. I'm new to this, and this is what's in front of me right now, so I'm going to have to take that stab at it. I'm going to have to take that dive, you know what I mean? I'm going to just dive right in, Stick with it. That's the best way I could put it. You know, I mean, when I say it's new to me, this is completely, bro. But I think I'm going to cut this live. No, I know for sure I'm going to cut this live. Like I said, tap in to Yuri Santiago 33. Yuri Santiago 33. Tap in. Yeah, bro. You got a lot more content on the way, too, you know. I'm going to keep doing what I do. That's all I'm going to say. I'm going to keep doing what I do. All cylinders, though, you know. I'm going on all cylinders, you know. And I'm willing to try something new. I'm willing to, like I said, new scene, new scenery, set the scene up, however I do it, you know what I'm saying? I'm not afraid. We just gonna go live. We gonna keep going live, you know what I mean? Like I said, my last live, I got video on the way. I got a video on the way. You know what I'm saying? But that was chapter 1, accounting, the language of business. I think it's about like 15 chapters. We gonna go through the whole book. At least read the whole book live, you know what I mean? I don't care if, like, okay, it's 15 chapters. Each chapter get its own live. That's how I feel. Each chapter get its own live. And just read it live, you know what I mean? Just read out live. Yeah. We about to cut the live, though. It's been real. Happy Memorial's Day. And I know I haven't been I know I haven't done a routine. I haven't done a routine, bro. I haven't done a routine. Not this week. I haven't. I haven't did no pull-ups, no dips, no diamonds, no squats. Yo, so you know that's another thing. I'm not gonna let that hunt me. I mean, that is gonna hunt me, really, because I'm gonna have to get back into it, bro. I can't go another week. Bro. Ain't no way I'm gonna go another fucking week without hopping into a routine, bro. Bro, don't let that happen. Don't do that. Another week without doing a routine? Bro, no, bro. So we definitely gonna hop back into it. You know what I'm saying? We definitely gonna do that. We gonna have to fight too. We gonna have to fight for it too. We gonna have to fight. I already know we gonna have to fight for it. Pull-ups, dips, diamonds, and squats. Pull-ups, dips, diamonds, and squats. That's what it's gonna be. Pull-ups, dips, diamonds, and squats. Pull-ups, dips, diamonds, and squats. You know what I'm saying? Pull-ups, dips, diamonds, and squats. Other than that, though, like I said, you know, got a lot of ideas flowing through me. You know, a lot of ideas. You know. And I'm feeling myself acting out on them too. You know what I'm saying? Taking action. And it's a new beginning. It's truly a new beginning. And I really feel like that. I ain't just saying that. I really feel like that. It's truly a new beginning. And, yo, I just don't know what to expect, bro. I really don't know what to expect, man. I'll tell you that right now. I don't know what to expect. It's a new beginning. I don't know what to expect. But I don't want to get caught up and not continuing to do the work, though. You got to continue to do the work. Can't be complacent, you know. No, we got to continue to do the work, you know. That's the main thing. You know, like I said, I can't let another week go by and I ain't did no. It's pull-ups, dips, diamonds, and squats. Pull-ups, dips, diamonds, and squats. I got some food on the table that need to, you know what I'm saying? I need to take care of that. You know, I can't leave the money on the table. No, I gotta take care of that. You know. Okay. Sweet potato. I don't know why I be saying sweet potato. I say sweet potato because, okay, ISO Speed be like green apples or green apple or, you know, I don't know, like green apples. I say sweet potato. I might have to switch it up to something different, though. You know what I mean? I just been rocking with sweet potato because, like, you know, I love sweet potato pie, you know? I love sweet potato pie. You know, sweet potato. I love sweet potatoes. I love yams. I love yams. Oh, yo, I love me some yams. What I say over the moon. Mexicana salsita and some yams. I have more power, mass, energy. I said, thank you, Lord. Hallelujah. I'm so grateful for my PS4. I made a meal on my PS4. I've been a millionaire since 24. Okay. That's enough of that. But nah, I love yams. So I'm gonna go say, look, sweet potato. If I say sweet potato, we cut the live, man. Until I come up with something better than that, you know what I mean? Sweet potato. I said Donnie loves sweet potato pie.